When starting to sell options, a lot of people are looking for cheap stocks, and getting into a cheap stock doesn't necessarily mean that you're getting into the best deal. Visually, a cheap stock looks better because you need less in your account to fund the collateral to do a cash secured put or purchase 100 shares to do a covered call. In this video, I actually found a cheap stock currently trading at $8.50, where I'm going to give you two option plays on that cheap stock. A cheap stock doesn't necessarily mean that it's a bad stock or a bad play. And you, as an option seller, don't really care about the outcome of where the price is going to end up super high or super low, as long as it ends above your strike price for a cash secured put and below your strike price for a covered call. In today's video, I'm going to be talking about the stock Snapchat, ticker symbol SNAP, trading at 850, and I'm going to talk about two entry strategies at an $8 cash secured put and at a $7.50 cash secured put, which means you need either $750 or $800 collateral to do this play, which means you have more than enough, most people, to do 5 or 6 of these type of contracts to start selling options. I am going to go over the technicals of this play. I'm going to go over why I'm personally looking into this play, but I don't currently have this position. So far, everything I've been showing you and all the plays I've been showing have been batting a perfect score with nothing currently being assigned in the demos that I'm showing you, between the SoFi plays, between the Rocket Lab plays, between the Palantir plays, between the Hood plays, between the crypto MSTU, MSTR plays. Nothing is getting assigned, and all the strike prices that I'm giving you on this channel so far have been magnificent. I'm not a financial advisor. This is not financial advice. So don't misconstrue it for financial advice. I am just a 42-year-old who retired last year at the age of 41 years old in 2024. And I use dividend investing to pay my bills. And I use my dividend investment ETF and stocks as collateral to borrow IOUs and sell options to generate a ton of premium to fund my lifestyle and buy myself the nicer things in life. This is not financial advice. This is financial entertainment. Take a look at the screen. First, this is Snapchat. And if you look at the last 5 years, you could see that we're literally right now on Snapchat where we were all times, right? All times we started at $24. Right now, Snapchat is trading at $8.50. And literally over the last 8 years, nothing happened. Over the last 5 years, we're down. Over the last year, we're down. And one of the most important things is right here, it had a massive dump over here to around this $8 mark literally about a year ago, and it hasn't changed. It's been literally, the lowest has been $7.23, and the highest was roughly right here at $12. So it's been like in this consistent range. And if you go a little bit closer to year to date, you see the range is a little tighter. And more importantly, in the last 3 months, the range is super tight, going as low as that $7.23, but as high as $9.63, which means this $8.50 is literally right in between the highs and the lows over the last 3 months. And this is kind of what caught my eye. With that being said, let's go take a look at the technicals and see what's a good entry point and do the calculations to see what is going on. If I'm going to go to the technicals, let's just start from the bottom. You have the stochastic oscillator, which is literally in the middle. It's literally in the middle where the green line and the orange line is about to kiss. This is so neutral, which is not a bad thing when you're selling options. It can go either way, but you have so much leeway going up and so much leeway going down. This is something that caught my eye. If you go to the RSI, you have a very similar story where the purple line and the yellow line are kind of going in tangent, about to kiss, and it's literally right in the middle. You couldn't have asked for a better number. It is trading at 50, which is crazy. So then you're going to go to the main chart. Going to the main chart, the first thing you're going to look at is the Bollinger Bands. The top of the Bollinger Band is right here at $9, and the bottom of the Bollinger Band is right here at $7.80. Now, the first thing I said when I started this video is I will be selling a cash secured put at either $8 or $7.50. $7.50 is golden And $8 is probably super solid as well. We'll go over the numbers in just a moment. In terms of the price movement, it's currently trading at $8.49 with the 20-day moving average literally at $8.47 and the 50-day moving average at $8.32 with the middle of the Bollinger Bands being $8.45. What I'm trying to say is the price of Snap right now is literally in the middle, in betweeny weeny, between literally all of the different indicators you can ask for. Even look at this. You have a massive volume line right here at around $8.24, 25 cents. And then you have another one right here at around $8.53. And the price right now is literally at this $8.49, $8.50, which again is telling me that the price movement is literally even Steven neutral, which is giving me a great opportunity for an entry point into Snap. Let's see what type of plays there are, and then let's do the calculations. However, let me show you one more piece of information. This is an amazing, amazing website. It's literally called Visual Stocks. You put in the stock, and they give you all of these charts. You don't need to look for it. It's really, really easy. I'm looking for inaccuracies, inconsistencies, something that would make me super hype or super worried. And again, this is just going to be showing me a lot of things that's just neutral. Daily active users is going up. The problem is most of these users are like teenagers, so it's really hard to get good ad revenue. The average revenue per user is essentially staying stable. It's literally where it was several quarters ago. It's going up a little bit. It's going down a little bit. It's pretty stable. You want to see it going up, but that's also why the stock price is doing so bad, which is okay because we're going to be doing cash secured puts at the bottom end of this stock. Gross profit per user, again, it's kind of standing still. It did a little bit worse last quarter, but in general, it's just even. Everything is just even. Like it's nothing is going crazy. Revenue, as you can see, it went down a little bit, but it's pretty even from where it was over the last 2 years. Net income is doing a little bit better, although you are still negative. You are doing better than you were in quarter 2 of 24, better than you were in the last several quarters. So everything that's I'm seeing right here is literally just screaming at me. A cash secured put at even Steven seems like a solid play and solid entry point for this stock. Now, there is a little bit of a cult classic, and a lot of people calling for this stock to be bullish. So even if I do have to buy the shares, maybe I'll be happy with an assignment. But like always, I'm really cool to roll this. I'm really cool to do a wheel strategy. If you're unfamiliar with what a wheel strategy is, click on the link up above. And once you're done watching that video and you want to know a little bit about rolling, click on the link up above. You guys won't be disappointed with the information. Let's go take a look at the actual play now. Quick announcement. Tomorrow, the 11th of June, Wednesday, and the 12th of June, Thursday, I have one-on-one coaching. It's $50 for 45 minutes. I have one spot left on each day. There's going to be a link in the comments down below. If you want to book a one-on-one coaching session for tomorrow, Wednesday, or after tomorrow, Thursday, click on the link down below, and you will be getting your money's worth in this financial entertainment coaching class. If you want to sell options, go right here, press Trade Snap Options. We are going to be selling a put. Usually I go 4 weeks out, but since it's literally the middle of the week, I'm going to go 4.5 weeks out. So this is going to be a half a week, 1 week, 2 weeks, 3 weeks, 4 weeks. Go to July 3rd. Now, there's not too many options for the options chains. There's an $8 and there's a $7.50. The $8 says that you have around a 73% chance of profit. To be honest, I'm not mad at the $8. I think it's a super solid entry. And this is paying a significantly more premium than the 750 strike, which we'll go over in just a moment. Right now, the delta is 0.30. You want to be roughly at a 0.20. But in this specific case, if I'm going to do this play, I'm probably going to be picking this $8 strike. And let's do the calculations. $100 divided by 8 equals, and then we're going to times it by 0.24 times 0.24, and you're going to get 3%. Now, If you know anything on this channel, I talk about you want to get into a play roughly 4 weeks, 20 delta, 80% in your favor, and you want to get about 2% for the month. So at 3%, this is a super solid play. Although I'm not quite getting the delta that I want, and I'm a little bit less than 80% at 73%, based on all the calculations that I'm doing, based on all the technicals that I'm doing, and based on us getting in so early. By the way, earnings is not going to be until the end of July. So we're actually going to finish this contract before earnings, which I also like on a stock like this that's already been beat up like crazy and has a following on X and social media. I'm not mad at an $8 strike. So I would probably be getting in with an $8 strike and not the 750. But let's just do the math at the 750. Instead of this one, let's go to the 750. Now the 750 is a 0.16 delta, 83% in your favor. Let's do the math. 100 divided by 7.5, and then I would times it by the premium of 11 cents times 0.11, and I'm only getting roughly 1.5%. Now, 1.5% is significantly less than 3%. However, it's also significantly safer of a play. Although I don't hate the $8 play, I would love the $750 play. If this is you and you're watching this video, it just means how much premium you want to get and how risky you want to be. Do you want to collect the 3% premium for a really good strike price? Or do you want to collect 1.5% premium for an excellent strike price at almost nearly the 52-week low? That's up to you what you want to do. I'm just giving you two variations. Guys, I want to address one thing before this video ends. A lot of people are always asking me, hey, Adam, I don't make a lot of money on these plays. I don't have a large account. But at the end of the day, the percentage is the percentage. Whether you're making 3% on $100,000, 3% on $1 million, or 3% on $1,000, the percentage is still the percentage. That's how much you get. The way that I generate this is I have dividend stocks. Against my dividend stocks, I'm printing money through IOUs using Robinhood. How does this work? If I have $1 million in Robinhood, Robinhood is going to give me roughly $250,000 to $500,000 in collateral that I can use for cash secured puts. So the 3% that I'm collecting has nothing to do with my underlying assets. It's literally me just using it as an IOU to sell these options. I don't have to take any money out of my pocket as long as I don't get assigned, and pretty much I don't get assigned. I'm not saying it doesn't happen. I'm just saying I'm so good at managing this, and I've been doing it for so long, and I literally do thousands and thousands of these contracts that I'm really comfortable in uncomfortable situations. If you have an account in Schwab, for example, and you have it in a retirement account, the money you put in a money market account, one of my coaching students was telling me, you can use that as collateral to do cash secured puts. And if anything, they just take the money out of your money market while the money market is still generating income through the interest that you're getting. If you are using this with cold hard cash, right? So you need the actual cash in your account to generate this. Sure, it might be a little bit discouraging because the percentage that you're getting is not crazy, although it adds up significantly when you do this consistently every single month, 12 times a year. That 3% is now 36% on your underlining. So 36% return on your cash, even if you're not doing it as IOUs like I'm talking about in either your retirement account or in your regular brokerage account, it still adds up. The point is, please don't get discouraged. I hope you guys appreciate me finding these little nuggets and cheap stocks for you to be able to start and initiating selling options. It does get easier. It does get bigger. It does snowball effect and make you money in the end. Of course, nothing is guaranteed in life except for taxes and death. However, this is a fantastic strategy that I personally use. The proof is in the pudding. I'm 42 years old and I am retired. How many people that you know at 42 years old can say that? And I literally use the same exact strategy that I am showing you in my videos to fund that retirement. No bullshit, no fluff. I didn't make my money off of you. I made my money off the real world before YouTube, which is unlike 99% of the bullshit YouTubers on YouTube. Thank you very, very much. And if you guys want more content, click on this video right here. It's absolutely amazing. More options, entertainment. Thank you and have a blessed day.